So what does today's action tell you about the durability of the momentum and tech trade? I mean, Tim, it seems like maybe just a rotation today. It was not terribly heavy on the headlines, other than what we told you a little bit there about NVIDIA. What do you make of the tech sell-off?
Well, the durability of it, outside of a couple real spikes in volatility moments over the last year, has been that it's not only durable, but it's extremely durable. And I think it will continue to be the place where you're going to get the most growth. Today's trade, though, did feel a little bit like rotation. It did feel a little bit like high flyers were under the most pressure. Did feel like high multiple tech. I have screens that I've actually go through that are high multiple tech companies. A lot of them were down 5 to 7%. And then you look at the staples, you look at the healthcare, you look at the home builders. We're going to talk about places that should be somewhat defensive. Interesting, though, some of the interest rate sensitivity that home builders seemingly have, they definitely have, except for the fact that today was also a day, and I think this has something to do with the risk off, that global bond yields closed again near the highs, if not at the highs. You saw JGB yields, you saw gilt yields, you saw Bund yields. And while U.S. Treasury yields aren't challenging their highs, everybody else is. And these are places where they've cut rates, and yet the long end of the curve is going higher. I think the market has some focus on that, although that's not most investors. I just think we've had an incredible run. And it does make some sense. We're in a very quiet time of the year. Frankly, if you're not on vacation this week, you might be next week if you're lucky. And that's what I think has to do with some of these outsized moves.
Interesting. Karen, you're nodding along. You agree?
Yes, I agree. Just about everything Tim said. I think that the run has been so extraordinary, right? If you step back a little and just squint at these charts, they're still really, up and to the right. And I think so. There was no particular news that really made anything move. And it's interesting. They all sort of moved together. And you talked about the crypto ones. I mean, even though if you look at something like Bullish, that I think did it open at, I don't know, 100% higher than here, maybe?
Right.
So that froth seems to be off of a lot of things. And there's still froth to grow, right? But I am long Mag 7 stuff. I'm staying long Mag 7 stuff. I do still believe in the promise and the growth of AI. I don't think the stocks will move in a linear fashion with the underlying, right? And I do think that they will peak before the demand peaks, but I don't think that we're there yet.
Dan, what about Palantir being in correction?
Well, so what's interesting about Palantir, when you're trying to find some reasons why these stocks might have sold off, Citron Research, which is a short seller, they put a note out today saying it's maybe worth $40. And so when you think about it right here, it was down 9.5%. I mean, that's a huge move. And granted, I don't think that report has that much weight, other than the fact that sometimes people just need to hear a little bit about this sort of, I mean, listen, it is a bubble. Make no mistake about it. This is one of the most egregious stocks I think any of us on the desk have ever seen, from the disconnection between the company, their products, their management. And this is not on the company. This is on investors. They are the ones bidding this stock up to 100 times sales, to 220 times earnings. And when you trade at a level like that, there's no margin for error, right? And so there's companies are expected to see a deceleration in earnings and sales from maybe 50% growth this year to maybe 30% next. But this is coming off a very low base, and you kind of think to yourself, okay, what do they have to do to grow into this? So again, if you're an investor in this sort of stuff, you got to understand there's different ways to play this. I think way Karen's talking about it, these hyperscalers, the investments they are making right now, they will pay off at some point in the future, right? There's no doubt about that. Maybe not to the tune of the hundreds of billions of dollars in the near term, but 5-10 years down the road to have this sort of infrastructure. That's not what Palantir does. They have a software, and it's not even their whole business, that has an AI platform that is helping companies move to that sort of technology. So to me, I don't find that particularly interesting. I do think it's interesting, other than the piece of news that we talked about, the short report. There's not a lot out there to do this.